Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Tuesday, December 23rd, 2025, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished firmly in risk-on mode, starting the holiday-shortened week on a positive note. The S&P 500 settled at 6878, rising 0.64%, while the Nasdaq 100 added 0.46% to close at 25,462. Crucially, the session was driven by continued momentum, but the real story right now is in the macro assets, which are setting the tone for today's session. Right now, the 10-year Treasury yield is trading at 4.15%, ticking lower by about 0.40%. This slight downdraft in yields should theoretically provide support for equities. The U.S. dollar index is notably weaker, down 0.36% at 97.60. Meanwhile, crude oil is holding steady around $58 a barrel, and gold is catching a bid, up over 1% on the back of that weaker dollar. The primary macro signal this morning is dollar weakness. This is creating a tailwind for commodities, but has not yet translated into a strong bid for equity futures, suggesting a more cautious open. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been quiet and lacked a clear direction. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished effectively flat, up just 0.02%. The index was held in check by a strengthening yen as chatter around potential currency intervention from Japanese officials continues to circulate. Meanwhile, in Greater China, the Hang Seng slipped 0.11%, while the Shanghai Composite finished up by a marginal 0.07%. The lack of any new stimulus announcements from Beijing kept mainland sentiment subdued. In Europe, major indices are trading with a similarly cautious tone, tracking the muted Asian session and providing a lackluster lead-in for U.S. traders. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are pointing to a softer open. S&P 500 futures are trading down approximately 0.06%, while Nasdaq 100 futures are seeing slightly more pressure, down 0.10%. The price action suggests a degree of consolidation after yesterday's rally. The slight underperformance of the Nasdaq futures, even as Treasury yields dip, indicates that the market is not in a purely risk-on mode and may be seeing some light profit-taking in tech. Looking ahead to the session, the economic calendar is notably light, which is typical for a holiday week. Therefore, the market will be driven by positioning and narrative rather than hard data. First, the primary driver will be holiday-thinned liquidity. With many market participants away from their desks, moves can be exaggerated on low volume, making the market susceptible to headline risk. Second, focus remains on currency markets, specifically the ongoing weakness in the U.S. dollar and the intervention threats surrounding the Japanese yen, which impacts global risk flows. And finally, institutional positioning ahead of year-end will play a key role, as funds lock in gains and rebalance portfolios. With a light economic calendar, flows may be driven primarily by technical positioning and any unscheduled geopolitical headlines. Given the overnight setup and the lack of a clear catalyst, the market's path of least resistance appears to be range-bound, pending any surprises. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.